Very good evening, everyone. Welcome to the session on importance of internal controls in a startup ecosystem. My name is Saket Mehra, and I've been joined by Rahul Rekhi, who's the training committee chairperson, and also Amit Sharma, who's the executive council member for IIA Delhi chapter. Together, we welcome all of you, and more importantly, we are thankful to our sponsor, SmartWorks, which is a leading provider of co-working space with almost 4 million square feet of area under management, with presence in almost 9 cities in India. Well, just to set the context, if you look at the data which has been provided by the India Private Equity and Venture Capitalist Association, the period which is the second quarter of the current financial year, it attracted the highest amount of private equity and the venture capitalist investments in India. It touched almost $25 billion, which is almost, I would say, 3.4 times of the in India over the last year. What it means is that there is any which ways a lot of excitement. There's a lot of enthusiasm amongst the investors when they are looking at India as a preferred destination, and more importantly, these startups, because the kind of ideas, the kind of innovative ideas which these startups have been coming up, excites and attracts these investments into India. But at the same time, if you look at, there is always a risk of a startup not really meeting the expectation or the expectation of the customer or maybe the expectation of the investors. And this could be on account of various reasons. But the most predominant reason which comes across is the intent of the man or the failure of the internal controls. And that's where to deliberate on this issue further, we have structured this program into two parts. We'll be having two eminent panelists who are there with us, and I'll be introducing to them shortly. Plus, we would be also conducting orientation session, which is around what internal auditors need to be focusing upon when they do an internal audit in a startup environment. So that's a broad background of this session that we have. We will also be taking any Q&A or questions from, and we have kept aside some 5 minutes. So please feel free to post your questions onto the and post the panel discussion. We'll take up those questions with the panelists. It's my honor to really welcome the two panelists that we have, starting with Prashant from SmartWorks. Welcome, Prashant. Prashant is the Chief Operating Officer at SmartWorks. In his current role, he is responsible for developing and executing actionable business strategies and plans that ensure alignment with the short-term and long-term objectives of. Prashant has got almost 17 years of work experience in consulting, operations, project financing, capital raising, and business planning. Before getting into SmartWorks, he was also associated with KPMG Hong Kong and EY as an associate vice president in the transaction advisory. So welcome, Prashant. We are excited to hear your views on this important subject. We also have Deepak Ahluwalia with us. Deepak is a chartered accountant with almost 2 decades of experience in finance, risk management, audit, and compliance across consulting, technology. He is currently the group head of governance, risk, and compliance at Zomato. In his previous roles at Deloitte, KPMG, and GE, he has advised large multinational organizations in their journey towards excellence, controls augmentation, and compliance awareness. Deepak has also been instrumental as part of the IPO, which came out with recently, and he's an advocate of sustainability and us to get certified on business responsibility and sustainability reporting conducted by the Sustainability Reporting Standards Board of ICAI. Welcome, Deepak. We are equally excited to hear from you on this subject. So I think let me start with you, Prashant, first. Prashant, you are the CEO of this, I would say, a young startup, which is just 5-year-old startup, but has made a significant presence in India in the co-working space. What's been your experience, when it comes to managing the internal controls in the initial days? What it took you to kind of come across those challenges of starting managing the internal controls, and how have you seen the internal control environment maturing in your organization?
Thank you, Saket, for the introduction. So, Saket, basically, what we've seen in the past is it's like a flight landing. When we started, we were at 20,000 feet. we had very less, or I would say only critical controls in place for only few functions. But as we grew and as we matured ourselves, we've learned from our own experiences. The focus has shifted now. We've implemented a lot of financial controls in place. Most of our teams have now gradually they have defined their own internal controls one by one. Each of the teams are now being follow. They are following the controls to the core, so that when the flight lands, when we are there at the number that we want to achieve in terms of the number of millions of square foot that we want to have, we have everything in place. We also went through a Series A round of funding in 2019, and that's when we saw, that a lot of controls were required to be implemented, and then we immediately started action on it. So over the years, we have seen that it has grown significantly. The risk control matrix has been brought into place, and all departments, from finance to accounts to procurement, inventory, you name the department, they have their risk control matrix in place right now. And it's also, it is also good to see that the team members have now started following all the processes, and the controls have been implemented. So now what we have done is this year we have started deep diving into each and every metric. So overall we started at a very high level, then we reached to certain levels where it is very, very important to be maintained. And now we're deep diving and making sure that at each and every step we have our necessary controls in place.
Sure, sure. So, Prashant, when you say that it's more like a flight which got landed, any turbulence that you faced?
Yeah, there were a lot of turbulences. Yes, we faced a lot of turbulences in between, but then a good pilot is someone who can land and who can manage all of it. So we did manage to land our flight safely. We've seen some processes going here and there. Let's say, for example, the sales would want to uh, lease out a space to a client, and they would want to start in 2 days' time without even doing the due diligence of a client. No,
Yeah.
you can't let it happen. At one side you can't let them take the wrong bus and get a wrong client on board, rather than
Hmm.
just let somebody do anything. So we've had our ups and downs. We've had our internal discussions. We've had a lot of discussions with the internal committee, the management, the board, as to what is right,
Sure.
what is not right. Some places we have burnt our hands. Some places we were right in implementing certain processes. So I think it has been a smooth journey till now.
Okay. So, what you're saying, Prashant, if I've understood you, that the process of risk identification, the example which you gave in terms of going out and performing the diligence on a particular property and the related risk which resides into that particular function were always kept in mind.
Yes.
Yes, they may or may not have been forming a part of the so-called RCMs which you talked about. But as you're progressing, you're trying to build up those RCMs by including all specific risk into the RCMs.
Yes, you're absolutely right.
So it's a journey, Prashant. I mean, it's been a journey for you and it's maturing over the years, right? Yeah.
Correct. It's maturing. We're learning from it's a continuous learning process, Sakit. So,
Yeah.
over
Yeah.
the years, we have learned from our, auditors, we've learned from the help of the experts, and we have seen that we've gradually improved a lot.
All right. Sure. Sure. Thanks. Deepak, moving on to you, and I'll just pick up the threads from what Prashant really talked about, moving from the start to a much more matured kind of an environment. Deepak, you have seen, in your larger experience as a professional internal auditor, you have seen organizations who were matured enough, who were running for many years, who had set systems and processes, and you've also seen an organization like Zomato, who was a startup when you joined, kind of a startup when you joined. What's been your experience, Deepak, of working in these two different environments? How has your approach undergone a change when it comes to these two different environments?
Yep. Good evening, everyone. Thanks, Saket, first and all, for a generous introduction. I think I would want to step back and probably define what we frequently called a startup or a matured organization, more from an audit and control standpoint, so that I think relevant aspects come out clearly. I think in terms of what we understand as large matured companies, I think from the audit or control standpoint, it's important to understand that these are primarily indicative of defined business models, which are already there working, for n number of years. There is very slow or absolutely no change over an extended period. Like you mentioned, yes, matured set processes of various activities that get performed on the business side, finance side, support functions, so on and so forth. There is a precedence of audits, whether it is internal audits, external audits, or any other reviews. There are set audit checklists that have been formed over the years, which have been polished by really great professionals over the years, and is used by teams to follow on. There is also access to abundance of data, reports, previous reviews, and all the material that is available for anyone to consume. There is also global precedents. There are leading practices that are very well defined, and one can do comparative of where one lands if you compare it with the leading practices. There's enough guidance notes from various institutes, various bodies. There's enough knowledge sharing. Also, from a regulatory standpoint, I think the regulatory environment is pretty settled, if not totally settled. There is enough precedence on what compliance is, what non-compliance is. There are enough case laws, decided case laws as well, if there is any ambiguity. So, these are the key attributes of a large matured company that come to mind from an audit and control standpoint. While if you move to a startup or a high growth company, these are all new and evolving business models. Right, the external environment, whether it is domestic or international, it is extremely dynamic. There are always unexplored charters or domains that all these businesses are trying to get into. It's extremely high growth. The speed at which changes happen in these organizations is really commendable. There is very high dependence usually on new age technology, not the traditional technology. Always there are pilots, experiments, and something or the other that is kind of brewing inside a particular organization. And of course, there is not enough precedence on the processes or controls or even the audit strategy for that matter. And last but not the least, regulatory environment. If it, either it is not present at all because those business models were never existing, and hence there is no regulation directly towards that, or it is ever evolving. Right. Sometimes business models follow a regulation. Sometimes it's the other way around as well. Also, from a people standpoint, and if you talk from an outside in view of process owners, if the way we call everyone who owns or runs a particular process, audit maturity is drastically different from what a large matured company will have. Right. So to set various objective parameters of how loosely we kind of define these two kind of category of organization, I thought it would be good to understand these nuances as well. So I mean, from an audit standpoint, I think there is a huge difference between the way one needs to approach, one needs to cater to what the objective of a particular audit review or any independent activity that any professional does, whether from inside the organization, from an outside. I think first and foremost, it's very important to understand the business context. I think while we as auditors always want to understand the business, but it's all the more important to understand in depth of what exactly is the business about, what exactly is happening in that particular organization, because it
Yeah.
more often than not it will be very non-standard stuff, new age stuff, and hasn't
Right.
been done anywhere else. right? So I think it is important to what the organization is trying to achieve, what is it that they are wanting to do, and where is it that they want to go. So it's important to understand that in more depth, and probably I would feel that in a matured organization. As an auditor, I think it's important to keep your ears and eyes open and close to the ground as much as possible, because the speed of change is very high. Not everything gets documented. So it's
Yeah.
important to pick up, and corroborate various stuff that you get to know from various quarters. There will not be any one single source of truth. You can't rely on just one document giving the entire perspective of any business area domain, whether it is support functions or key business areas as well. So it's important to keep your eyes and ears open to the ground, talking to people, process owners, and being engaged with them to understand what is changing, what is happening in the business. I think that's of prime importance. It While the fundamentals remain the same, right, in terms of what strategy that needs to be applied, but I think what changes is, while we of course key fundamental being risk-based approach to cut out the landscape and see what is high risk, what is medium risk, and kind of prepare your audit landscape basis that. But I think one needs to get a little deeper on the risk-based approach as well, and not just stop at what if, right? So usually risk based is what is the risk here, right? But I think the first answer is the easy answer, and probably most of us tend to stop there. But in these kind of organizations, it's important to drill down further as to, if you get an answer to what if, and that's a obvious scenario. I think we need to go further and say, so what, right? And then what? So I think you need to kind of unlayer and arrive at that what exactly is the risk. Sometimes the risk is too theoretical or attached with our experience as well. But if we drill down further, in a lot of cases I've realized that at the end of the day, the residual risk that we are talking about may not be as big as it seems like from the
Okay.
surface. So it's important to have that perspective. Of course, I think the speed of execution of any kind of audit strategy has to match with the organization. You can't take 3 months to do a particular internal audit. For sure,
Right.
an organization will probably have changed its processes or some practices, and by the time one comes up with any recommendations, it would have gotten stale. So I think that is a very important area. So one needs to scope in accordingly so that you are able to conclude the audits, in a time which is going to
In
be
a time.
helpful for the organization to
Yeah.
improve. Um, I think the other thing is on dealing with process owners. It's like I said, maturity of auditees is very different in a startup environment. Some things which we've always thought that it's very well understood. If you go to someone and say, "Ki, Acha, I need a transaction," in a very matured organization, because they know what the transactions are, and those are the transactions that are happening for the last 50 years, for example, and they've undergone these audits. They will, within that ambit of transactional reports, give you what you really need.
Yeah.
Whereas here, I think it's always important to give context as to what you are looking at. What is the objective, and what is the hypothesis that you are building on, basis
Right.
which the ask of the data needs to be contextualized, and so that you get the right, relevant, and accurate data in the first time itself. Otherwise, there is too much of back and forth in understanding of what the requirement is. So I think these are some of the key aspects of I thought are relevant, differentiating the two kind of environments from an audit control standpoint.
No, I agree, Deepak. I think rightly pointed out. One is the speed of change, which you talked about, the maturity of the process owners, the involvement of technology. Invariably, startups have technology playing a very significant role. And that's where I think the alignment of the audit approach also needs to be taken into consideration. I think that brings me another question, Prashant, if I may ask you. I mean, and staying on to the theme which Deepak just talked about, the speed of change, adoption of technology. What's been your experience in terms of, you as a CEO of an organization, really wanting to bring that change in the organization when it comes to making the people much more control conscious, making the people much more control oriented in the respective or the functions to which they belong to. Have there been any challenges that you have faced, or has it been a smooth ride so far?
So, Saket, going back to the first point that you said, it was a bumpy flight, but yes, no process is easy to implement. When we try to do something new, a lot of challenges, a lot of pushback comes from the team because they would always want to take the shortcut to do
Yeah,
any particular task, and they would not want to miss the bus, basically. But then, as senior management professionals, as controllers in the company, it's our responsibility to make sure that we don't let them, board the wrong bus. They should always and always board the right bus. And therefore, the processes and the controls have to be imposed sometimes on the team members. Uh, and with a startup like ours, wherein we started, I remember in 2018 we were close to only about 100 people. Now close to we are now close to around 350 people, with all different middle management managers joining in from different companies, different
yeah,
industries. It also brings in different kind of experience on the table. When you have so many people who are coming from different companies, they also come with different kind of controls that they would have seen in another company and they would want to implement. So
right.
it's up to us as to how do we see what's best in the interest of SmartWorks. How
Hmm.
do we, make them bond together, gel together to see that we
Right.
pick certain from there to implement what is good for us, what is not good for us.
Hmm.
Continuous coaching is very important. So, it is not one-sided. You cannot just impose your, processes or thought processes on it. It has to be like a 360-degree review. You share the control that you want to do with the business owner, seek his or her advice, go back, discuss a couple of times with them before you start to finalize on your control matrix. So we have seen this happening. It was not an easy task for us to do, but then over the period we realized that if we just go and tell them that you need to follow step A, B, C, D, it's not possible. It has to be, okay, why should we do A first? Why not B and why not C first? It has to be like that.
Okay. 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 So when you say, controls had to be imposed, onto the people because the people were coming from different background, different industries. Deepak, if I may move on to you and staying on to again the same theme, how important does it become for an organization like yours to have a framework put in place when it comes to imposing the controls? And I'm talking about from a process level control framework standpoint as well as from an entity level control standpoint. Uh, what do you think it's important, existence of a control framework
No,
in imposing
absolutely.
the
I think I
controls
would.
onto the people?
I think I'll agree with Prashant. Of course, people coming from various quarters, and mostly from, when you end up in a startup, you're mostly driven, and your experience is more, while there are ideas, but if you've worked earlier, mostly you would have worked with a very structured organization as well, right?
Right.
But then the idea that anybody kind of picks up or works, that's kind of out of the box idea, right? So which doesn't have any precedence, and so you can't impose the kind of backlog that you've all carrying with you. You have to, formulate new set of kind of rules to operate in.
Yeah.
In my view, I think one of the most important controls, or at least the framework that I feel is important in such a setup is presence of really strong entity level controls. And when I say entity level controls, I
Okay.
think it starts from the tone at the top, right? I think in terms of the culture of the entire organization and how that culture is driven, and
Yeah.
the tone at the top is kind of percolated, that pretty much defines, the accountability, ownership, and various aspects of your behavior. whether there is something written or
Right.
not, whether there is a documented process or not. But I think if that context is set, the information and the reason what an organization is doing and why it is doing, if that is well understood by a large part of the organization, it actually acts as a control framework in itself, without, of course, being documented to the T. Of course, within the realm of whatever is statutorily required to be documented and followed. But outside of that, I think that is the kind of flexibility that even the business folks need and enjoy, right? So I think
Sure.
they wouldn't want any theoretical control to be in place, which can dent the speed of progress. Right? So it's
Change.
important to maintain that balance. It's a tricky balance to maintain, and hence one needs to really do the risk assessment well, which I talked about earlier. That it's important to choose the battles in a manner, right? So what exactly is that we want to put our controls in, right? And if a large part of it can be addressed with basic controls, like having a code of conduct kind of put in place, and ensuring that people are aware about various aspects of it and not just a theoretical paper lying around, right? So if people understand the code of conduct, the ethos of the organization, and there is enough governance to monitor compliance to that code, I think that acts as a large part of the entity level control. I mean, basics such as putting the right kind of compliance framework in place, right? So if one spends more time and energy in defining on a regulatory side, right, what is it
Right.
that one needs to do to ensure that you're always on the right side of law. I think that is more important than probably putting very transactional controls all through the entire transaction flow. Of course, on the transaction side also, one needs to understand that what is that key control that probably needs to be there, right? And mostly should be tech driven and preventive, but at the same time, it should be an absolute must to put in, right? Otherwise, exception reporting, which is more of a discovery kind of a control,
Yeah.
I
Yeah.
think that can be relied upon for a large part of transactions that are happening, if that those are not life threatening, right? So I think that is broadly I've seen to be more successful in an environment which is high growth, which is high dependence on tech, and you're working towards a new business model. I think that is my opinion.
I would agree to it, Deepak, because the kind of environment we are talking about, we have the millennials who are working. We have, as Prashant talked about, people coming from different industries, different background, and you also said something like the culture. So it's all about, I would say, alignment of the culture or the value systems of an organization with the behavior which the people are expected to have in the organization. I think the auditors also need to align or change or modify their audit approach, leaving behind the standard specific, I would say, a risk-based or a checklist-based audit, rather than making it much more aligned to the speed at which the business is changing. I think that's a fundamental to really look at more from a startup standpoint. Well, I think very well articulated, Prashant, Deepak, about the points which you talked about, be it a 360-degree review, which is important, reprioritization of the risk, which is required to be done at a much more frequent interval. You talked about how typically the speed of change and the technology takes place in a startup kind of an environment. With this, let's move on to the next part of our session, which is in terms of really looking at very critical aspects as to what the internal auditors need to be focusing upon while undertaking audits or internal audits in a startup environment. And to do that, I'll invite Rahul to come onto the screen, please. Rahul, you're there? Great.
Yeah,
So,
thank you. Thanks a lot. So I think it has been
so
quite an interesting session. So I have Manuj with me. I think, Saket, it has been quite an interesting session, understanding one side from a promoter and one side from a governance expert.
yeah,
What
yeah.
all is required in a startup,
And
and it's quite
Rahul, let me
insightful
thank
and quite.
Yeah, let me thank and Deepak for sharing their insights, for sharing their viewpoints. Immensely useful, Deepak, Prashant. Thank you very much for joining in. Over to you, Rahul.
Thank you, Saket. It was an honor to be here.
Okay, sure.
Thank
So
you, Saket.
I think I'll just introduce myself. I'm a partner with the advisory in KPMG and focus on basically traditionally on manufacturing industry and now more so on startups. And I'm joined by Manuj, who has been through consultancy and now works at one of the largest startups in India, which is Oyo. And we thought that to get perspectives on perspectives on the current topic because he's been there now for 2+ years. And things are looked at by consultants and what is it with the startup and startup when you're working there and when perspective and from a presentation.
Rahul, I think we are experiencing some network issue at your end.
Yeah, even I can't hear him.
You may want to just check Rahul once. I guess there seems to be some issue at Rahul's end. Manuj, may I request forward?
Yeah, absolutely. Sure. Thanks, Aket. Okay, so let's start with some exciting numbers. And since most of us are finance professional, we, I think, is aware of what is the size of Indian economy. Uh, my understanding is it's hovering somewhere around $3 trillion. Now, let me draw a parallel with startup back in 90s, Amazon. Their their market capitalization in the current year is around $1.7 trillion, almost half of what Indian GDP is. That is, that is the power of a disruptive idea in the market. You know, uh, talk about some Indian startups. Byju's, they started their uh, company in 2012, and as on June 2021, uh, they were sitting on a valuation of around $18 billion. Similarly, Flipkart, uh, within 11 years of operation, they were Walmart has invested there, and within 11 years, their valuation has reached to $20 billion. This is in 2018. Now, now let me bring another example. A company like Unilever, which is 92 years old company, and nowhere I'm discounting Unilever. It's a great company. Uh, their their market capitalization is around $138 billion. Look at Amazon. Started 25 years back with a disruptive idea. It's a new idea in the market, and they are sitting at $1.7 trillion. And Unilever, we know Unilever. Everyone has used their products, but still sitting on $138 billion. So startup is contributing uh, to our economy in a big way. And coming back to India, India is the third largest tech startup ecosystem. The first two is obviously US and China in terms of number of startups, in terms of unicorns. But India is picking up pace really fast. Indian government is also helping, and they have recognized 41,000 startups in a India startup program which they have started. 66 unicorns in India till date, and 28 becomes unicorn in September 21. And let me just probably, in the interest of everyone, unicorn is a company whose valuation is $1 billion or above. So in India only there are 66 unicorns which are recognized, and 28 is become unicorn in this year till September. The kind of jobs which are created by startup is around 470,000 jobs, maybe more, but this is some numbers which are available on the public domain. 175,000 jobs created last year, a year which is full of exceptions. Pandemic year, we can call it year of Corona. 175,000 jobs were created in 2020. That is, that is the power of startups. That is something we are talking about here. And can we think of a company who has reached $2 billion of valuation without having a right set of internal controls? I don't think so. That's possible. Think of Amazon. 25 years back, they have started their company from a small garage, a small room, and now this is the valuation they have. And is it possible without having, a proper internal controls? I don't think so. So, in similarly, business is important. On the same, on similarly, internal controls and compliances are very, very important for any organization to grow. Let's understand the ecosystem of, the startup ecosystem. How, what all different elements which are involved. What are different different companies, different elements which are supporting startup ecosystem. Obviously, startup is one company which is very young. I would say companies which are disruptive, they are speed oriented, innovative, and led by some younger generation people. Not true in every scenario that they are led by younger generation, but most of the cases they are led by younger generation people. But their ideas are disruptive, those are innovative, and then obviously they have one thing in common is speed. What are the different supporting organization there in the market who's supporting startup ecosystem? We have one common theme across all startups, that these are supported by some other different organization like incubators or accelerators or mentors. These are those organizations who actually help startups at the early stage of their when the idea is formed and then it is launched. They somewhere support organization. These are also called as seed accelerators. They support early, they support the growth in the company, they provide mentorship, and they also provide seed funding to the founder or to the promoter. Government bodies, very, very important. Why? We have different policies which are coming up from government, and most of them are now favorable for these kind of organization. One policy is Startup India. There are so many different benefits which is attached to it. You get tax holidays for 3 years. You get concession in terms of the public procurement policy. You need not to comply with those number of years they mandate at the time of floating the tenders, or the amount of volume you need to have. You can actually file without having those kind of numbers in your credential. Then you get funding. So government has set aside 10,000 crores for funding these startups. So those are the kind of policies which are launched by the government. There are certain policies which were not that favorable early in 2013. For example, there was one policy where if companies funded by FDI, they can't keep inventory. So it has majorly impacted e-commerce companies. They were merely, operating as a handshake between seller and a buyer. Then there are research and knowledge institutes which help a company in forming their idea, help them in doing the research in terms of if you launch this product, what kind of volume, what kind of traction you can get, uh, uh, how much is the profitability, what is the size of the market, and all kind of knowledge they provide through research. And then the most important part is funding. There are a lot of different uh, fund arrangements which are available in the market, like you get angel investor, you then get venture capitalist, you can get fund from different banks or NBFCs, and then you park your equity privately to different investors. And the final, which now in 2021 we have seen that's a wave which has come in, a wave of IPO in India. So a lot of startups are going for IPO, and they are being successfully, couple of them is successfully being listed in the stock exchange in India. Earlier, the trend was that all the startups used to get listed in US, and they used to prepare for US listing. And now we have seen a change in the entire scenario, thanks to Zomato, who is one of the first one to get listed successfully in India. And now a lot of companies are preparing for IPO in India. What are the different factors which are involved, which are fueling this growth? Why, all of a sudden a boom of startup? Everyone's talking about startup. What is the change which has happened in the market? What is the change in the sentiments which has happened? One is there are different innovative solutions based on the technology which is there in the market, and people are ready to support it. People are ready to accept the change, that yes, a product can be delivered at home without having a feel and touch. We can get the product, and yes, it will be good enough for use. If we get a mobile phone online, it is good for the use. uh, and that is the change which is happening in the mentality of the people. Second biggest changes, of course, a lot of government support which we get over a period of time. There are a lot of relaxed procedures and compliances, tax exemption, Startup India, as earlier spoke about it. Third biggest change is penetration of internet. Uh, Earlier, if I go back in early in 90s, late 90s or early 2000, mobile phone was something which was like a luxury for all of us, and it was very expensive to have it. At the same time, the call rates were really high, and internet was not available. Now, within last 15-20 years, even the smallest of the person has a mobile phone with a proper internet connectivity. So that is the penetration we have seen, we have experienced in last couple of decades, and that led to a lot of applications coming on the phone through which you can actually avail the goods and services within few clicks. Uh, so internet is helping us big way. Uh, Rise of consumerism, where people are ready to buy products, they are ready to spend more. Their purchasing power or their ability to purchase has increased tremendously. Earlier, people used to save a lot, and then whatever is left is something is spent. Now it's other way around. People used to spend a lot, and then they think about savings. uh, uh, and hence a lot of new ideas are coming up in the market and getting successful. uh, Again, pandemic is somewhere helped a lot of startups, because when people are closed behind the doors and they can't really move out, they can't really step out, they decided to avail the goods and services through different means, which is basically through online uh, uh, means, and they are able to enjoy those products and services. I must thank a different startup who have changed their ways of working for the customer as well. But at the same time, even customer was very enthusiastic to use those services online. And the last but the most important one is the availability of capital. uh, there are a lot of investors now in the market, and even banks are happy to provide different kind of funds to different startups. Earlier there was a hitch, then God knows whether this startup will be successful or not. But now there is a easy capital which is available, and as we all know that these smaller companies started with a very small funding. There is a news, or there is a report which is available in the public domain. 58% startup have less than $25,000 for when they start their business. 58% startup has less than $25,000, which is small, which is like 20 lakh rupees. They don't have that kind of funding available, so obviously they have to rely on the investors to get the fund, and they happy to provide that fund, even though startups at the start of their business or during initial 4 or 5 years they are not profitable, but it is all based on the GMV, gross merchandise value, which is like the sale, based on which they are getting the valuation and they are getting the fund from the market. There are a lot of myths surrounding startups. I'm not saying that these are only myths. It might be true for the initial stages of any initial stage of any startup. At the same time, a lot of companies have overcome these challenges over a period of time. The first one could be, there are no standard processes. Everyone has its own way of working. There are a lot of revenue leakages in the company. The operating model is inconsistent. Controls are not there. A lot of loopholes in the processes, and the operations are not is not managed properly. Yes, there is truth around it. The reason is that these are new business ideas. These are new processes. They are evolving over a period of time. It's not that this, and as Deepak has rightly said, that there is no precedents which are available for startups. This is hence startup becomes really vulnerable. But at the same time, this become a startup has become agile because there is no defined precedents which are available, and hence this help them to achieve the right business model over a period of time. There is a lot of success stories about startups, but at the same time there are a lot of failures in this domain. What I understand, 9 out of 10 startups get closed. They never see a day's light. Out of the one which is left, which is 10%, 20% get closed in next 2 years. Remaining 50%, out of that 80% which is left out of one, 50% get closed in next 5 years. So only few minuscule startups is able to become successful, and these are the loopholes, or these are the reasons why they are not able to get success.
So I think, Manuj, I'll want to add in here. Sorry for the network issues earlier on. So I think a very relevant point which Manuj has brought in is that 9 out of 10 startups fail. And that is not anything to do with the controls or control environment. That is to do with the earlier part which was being discussed about the business idea. So if I have and it's not about the startups, it is about any business. When you get in a new idea, it may or may not be successful. And that risk is being carried by the entrepreneur. Today, in the age of startups, it gets a little bit more magnified so as to bring out that the startup has failed or 9 out of 10 startups failed. But the reason is that because the idea is very dynamic, the idea is very different, and they are also experimenting with it, it may succeed or it may not succeed. So these myths, and to add another point to it, today the environment is very mature. Startups, as we had seen from a funding perspective, though initially they may be bootstrapped and being run by a very few small set of private investors, but soon every startup gets in investments as and when they scale up, and as and when the business idea becomes more acceptable, they get adequate funding, and anyone who's doing a funding, first of all, gets their due diligence done. So that is a very extensive check on the financials, the legal aspects of a startup, which are most important. And the financials, if they're being prepared properly, obviously there would be some controls around financials preparation. So those basic controls are any which ways available. So though these myths may be true in certain aspects, and the idea is to go through each and every aspect and understand why. Maybe we can relate back to this slide. This is a very nice way when we go through what are the controls and what are the requirements people expect, and how inter-audit function can add value. I think we can keep referring to these myths and see how value can be added and at what stage of a startup value can be added. Thanks. Yeah, Manuj.
Yeah, thank you, Rahul, for adding. What led to these myths? Why these myths are there in the market around startups? Uh, because as I mentioned that the business operating model is evolving. It's not a set model which is there tried and tested in the market. It's a new business idea. They wanted to establish a business out of it, and hence there are frequent adjustments which they do in operating model. Uh, Earlier, the focus of any startup is to come out with the right business idea rather than doing a lot of documentation. They start their operations from a small room or a small garage or from a small office. At that point in time, documentation is not something which is very important, and later at a later stage it becomes important. Companies do abide by documentation, but then at the start of the business it's not very important for them. Similarly, the kind of agreements they have with customers and vendors, it becomes not very important for them to have the right terms and condition mentioned there. And later on, they change different agreements. There are different examples which are available. For example, I was auditing one of my client in when I was with Big Four. They used to take AWS, Amazon Web Services, and there um, uh, what we have seen that they were actually using the agreement which they have done at the initial stage of their company, and they were using that agreement, the same rates, even after they become huge, they become giant. And those rates might not be applicable for that kind of company, but they still used to give that higher rates. And when we started looking at it very critically, we went back to the management, we understand the history, and then when we started, we asked management to renegotiate. The cost come down drastically, almost 70% of the cost which they paid earlier was not there at all after they renegotiated the agreement. Similarly, monitoring of vendor KPIs, internal SLAs, it's not something which is a first priority for any startup. The first priority for a startup is to prove their business model, operating model, and to bring traction about their products in the market. And this takes a secondary seat. And now when startup started maturing up, they started looking at the vendor KPIs. Uh, One example which I want to quote here again, in an e-commerce company, what we experienced that at the time of customer return, uh, the logistic company used to pick up the material, but most of the time, what we have seen, they either partially give it back to the seller, or sometimes they don't even give back to the seller. And there was no reconciliation process between what a logistic company has picked up and customer get a refund for versus what is being received by the seller. And there was always dispute with the seller, and finally company end up paying to the seller also and to the customer also for the same product. And who kept that product was the logistic company. So those kind of things which always come internal audit. It's important to understand how there is a flow of transactions, not only from the book perspective but also from the physical handover perspective. And there we do a lot of walkthroughs, and we come out with these kind of anomalies in the process. And after when we highlighted this, companies started doing a proper reconciliation, and they saved a lot of money. And again, seller management was improved a lot. Decentralized vendor management process, a classic example. A lot of companies have different, they divided the country or in a different zones. In every particular region has their own different set of vendors. They might be procuring the same item, same quality, but they don't have a centralized procurement policy or process, and hence different rates are being given to different regions by the same country. And again, the economies of scale, something through which they can get the benefit, was again not provided by the vendor. Uh, After companies become mature, they started looking at vendor management process very critically, and then they started bringing it to one platform. Not only in India, for example, if the startup has operations in different countries, they started looking at kind of a shared service center, or a kind of a centralized procurement department where procurement is being done, negotiated by one particular set of individual or set of people, and they do it for all the countries. Uh, then startup think that most of the companies think that their different products has different ways of working, and operation can be tweaked according to a product portfolio. It may be stand true for different products, but to understand and to accept that for all the products is something which is not right, and this will lead to different again problems, that regions doing their own ways of have their own ways of working, different product people have their own ways of working, and uh, and again companies at loss. So these are some example why this is happening. What are the different set of challenges which companies you know have at the start of their businesses, which keep on lingering into them over a period of time. And as an auditor, how we can help a company to operate in the right framework or right control environment, which obviously will help save a lot of cost for the company. And obviously, as uh, uh, Deepak and Prashant said, that it will help bring value on the table, not only compliances. Uh, then we have problem in process value chain. A lot of processes in these companies is automated. And why these are automated? Because these are generally tech-based companies. They heavily rely on technology for their processes, but and they have a set of systems. They have set of, I would say, different tools through which they do the entire transactions. But those systems are self-made systems. Those are evolved systems. Those are not like SAP or ERP, which are readily available in the market with the standard set of controls. No, they are created in-house, and hence there are few lacunas which remain unaddressed for a longer period of time. There are a lot of interface challenge between one system to another system, and hence there are manual dependencies which got created, where one data of one system is fed into another system by a set of people. I've seen one example of make my trip, say, sometimes if you Google a particular hotel, you see one room is available in 1 lakh rupees. That's something which is not possible looking at that kind of hotel. But then you see these are probably manual entries, manual errors which are being made by someone. And these happens in a lot of companies where there are manual dependencies, there are lack of interface between one system and another system, and hence the business suffer. Uh, Again, independent decision making. A lot of decisions in startups are made by single set of people. They don't believe in too much of hierarchy. The simple reason is the need for speed. They want to move fast, and hence decision making is a lot of decentralized and made by few set of people, and hence they probably not able to evaluate the pros and cons of it, and lead to a lot of problems. Similarly, regulatory non-compliances, again, the focus for them is business. Regulatory for them is not something uh, which is important. They understand the importance of it, but they are not able to evaluate what is right or what is wrong for them. And again, for some of the businesses, there is no set rule in the market, because those are evolved over a period of time. Those are new ideas, very innovative. There are no set rules, and hence even sometimes government is not clear how to put tax on a particular transaction. So it leads to a lot of regulatory non-compliances. And again, we as auditors can help them in looking at the entire regulatory framework very critically, and can let them know this is something must to have on day one itself. This is something which is good to have, and can ask them to comply with it. Corporate governance, this is again at the start of the business. This may not be a very important or critical uh, uh, element for any startup, but over a period of time, yes, it becomes very critical. And when now we are talking about a successful stories of IPOs, corporate governance is very important and critical. And without having a strong governance, no company, trust me, can think of going for an IPO. Uh, uh, what corporate governance here means that the right decision is being taken, the transparency is there, tone at the top, right processes and policies are being defined. There, as an auditor, we can again help businesses to let them know what is right, how policies and process needs to be established, and those policies and procedures needs to be established right at the first time, how we can take care of the compliances, how the tone at the top is set, code of conduct, conflict of interest. All those issues are uh, are something which is there in all the companies, but those companies are matured enough to take care of it. Unfortunately, startups at the start of their business is not very convergent with these kind of policies and processes. And we as an auditor, since we have seen a lot of different companies, what are the problem they face when they don't have the corporate governance, we can educate people, we can help them in defining the policies, we can help them in providing the right set of training, and again we can help them in looking at the right set of MIS. MIS is very important for any startup. Why? Not only for the promoter but also for the investor, because investor has invested heavily in a company, and they want to know the real picture about the performance of the company, not on a yearly basis, but they want to see probably on a weekly or a monthly basis. And hence MIS becomes an important tool for them to gauge where their investment stays as on date. And hence we can critically look at the MIS, how those numbers are combined and how those are reported and consolidated. So these are few areas where companies are struggling. At the same time, a lot of companies have matured over a period of time, and we as an auditor can play a very pivotal role in setting the right tone at strategy, at operational level, and at the transactional level. Just based on my own experience, there are few do's for internal audit in a startup, and this may be applicable in a lot of different mature companies also. But I would just like to call out few which are absolutely important in any startup environment.
I
Involve
think,
early in
Manuj,
any.
sorry, I just wanted to add one thing which is very important before Manuj goes into this slide. So when we talk of startups, given the perspective, there are aspects which are important from a startup perspective. And Manuj rightly pointed out that these may be equally important in any other company. But for a startup, they become more important given that the business model is very dynamic, changing on a regular basis. And there are people from different backgrounds joining a startup. So if you look at a startup, there'll be a person from a cement industry, there'll be a person from a services industry, and there may be a person from a logistics industry, which are quite diverse in itself. And at the same time, there may be a person from another startup. So everyone brings in their ideas. Everyone tries to set processes the way they want. So it's very important that the internal auditor plays a very pivotal role, not only in helping them uh, get on a single path, but also to see that value is added at every step, because that's what the startup is looking at. They're not looking for speed breakers in terms of controls. They are looking at, I'll say, a smooth road with adequate checks and balances or tolls wherever required. And tolls with today, if you talk of a toll road, there's no need to be paying cash. You can you just automatically go through a fast charge. So that's what they're looking at, that I have all the adequate controls and my car should pass. No one should be stopping me. That's, I think, a good analogy in case I were to put it in that manner.
Yes, absolutely. A fantastic example put in by Rahul. And just before I start with the list. What startup needs? They want someone to partner with them, who can tell them what is the right way of operating their business. Not from the business perspective. They know their business more than anyone else. But from the control perspective, from the compliance perspective, they want to sit on the right side of the compliances, right side of the law. And hence it is important for an auditor to collaborate in a day-to-day business with the management, and do course correction if required, otherwise help them in establishing the right control framework. uh, the first one just wanted to call out is any new business, any new process, any new product. And I'm not saying a new business in terms of new company. I'm saying any new line of business a startup is launching. Be partner with them. Try and understand what are the checks and balances they are putting into the new process or the new business they want to launch in, and establish or help them right at first time. Because again, startups are very agile. We spoke about that. But for any company, be it a startup, very difficult for them to change their business model. It has a cost attached to it. Change management is always very difficult. This point I touched upon, help management in driving controls, a control implementation rather than only highlighting gaps. They, management needs a partner who can help in implementation of control. It's very easy for us to sit and highlighting gaps, but if we sit on the other side of the table, they said, with this kind of speed, it's very difficult for me to implement these controls. For example, we say you have to have a maker checker in every transaction. They said if I do that, I will lose out on the speed. And that's the beauty of startup. Unlike any mature company, that's the beauty of startup. They don't want to compromise with the speed. So they're saying, we are busy in doing business. Why don't you help us in implementing the controls? So partner with them. They have a unique business model, unlike any FMCG company or a pharma company, which has a set business model. They have very unique business model. So it's very important to understand the entire business to entire process to determine the right or scope. One, obviously, you wanted to provide an assurance to the management and to the investor that everything which is reported is correct or not. But at the same time, how can you add value in the business is important. Every step is what just Rahul said, that they want some kind of value addition. So it's important to understand that unique business model which a startup has coming out with, and and then do a kind of a value addition audit apart from compliances, which is must. uh, Data analytics, very important. Why? Because companies are heavily relying, these kind of companies are heavily relying on systems. There is a bulk of transactions which are happening not physically but through systems. So there is a complex data, that the volume of data is again very high. So we can we can we can actually look on the data through data analytics. This also help us, our organization, as an early warning mechanism. So I think a lot of companies have established continuous control monitoring. For the revenue assurance is one piece a lot of companies are operating in, where they look at data on a real-time basis. There is a set team who's looking at it very critically, look at the opportunities for cost saving, where the process and system is getting abused. They have defined parameters, and they keep changing their parameters as the process is changing. So it is not that you define the parameters and run it for 6 months. No, that's not possible. Every month you have to look at your parameters critically. Something which was relevant last month may not be too relevant because of the changes in the business model this month. So data analytics is another one important tool which auditors can use to detect process flaws, leakages, uh, excess costs being incurred, uh, perform detailed walkthrough of systems and understand possibility of data loss or data leakage. Very important. One, there are compliances about the data leakage. There are a lot of laws which are introduced by different countries, including India, on the data leakage. At the same time, it's important to understand how the data is flowing from one system to another. Somewhere, is there any data loss in the interface, and hence something is not correctly being captured in the other system, or at the same time, it is manually fed. Since the data is large, very complex, it's important to do a proper walkthrough of the system. We can't do audits in a fashion that we understand the process and hence everything is fine. We do a walkthrough of the system. At the same time, we should do walkthrough of the systems end to end. Do not hesitate to perform field visits. As I mentioned earlier, these are very unique business models. It's important to understand those business models, and hence it's important to go and see the operations yourself. It's important to see what is happening on the ground, how things are managed. Sometimes because of the speed, because of the controls not properly implemented, uh, things are getting compromised. So it's important you go see operations yourself, and that actually brings a lot of insights about how things are managed. And there, I think what we can probably do more justice to these kind of operations and add more value to the business. Uh, Again, as I mentioned, these their systems are evolved over a period of time, and access right is being given to a lot of people. They don't know, the what is the segregation of duty and why it is important, how someone can abuse different conflicting rights given to him or her, and then it can be misused. You know, we have seen one classic example where something called MOP fraud, which has come into the light, where uh, data is being taken away by someone. So data is masked for one particular person up to a limit, then masked for another person to up to a limit. But since the access right was given to a particular person for both the data set, they took out the data. They started calling to the customer that you ordered this particular item on this particular date at this price, and the customer obviously said yes. I'm calling from XYZ company. If you pay upfront, not a COD, you will get a 20% discount. And they said, okay, we are happy to pay you upfront and ready to avail the discount. Then they said, we will send you a link. You pay, in place of 2,000 rupees, you pay 1,600 to us, and you will get your product. And that money goes into the account of the fraudster rather than to the company. And when the product reaches to the customer, they said, we have already paid for it. And they said, no, this is COD, cash on delivery. And hence these frauds are very common. If the data is not correctly masked, the segregation of duties are not correctly managed. And again, a big problem we have seen across different companies where super user rights are distributed to different set of people. Super user right is a right where people can see all the data in one go, and they can do anything with the data and the transactions. To put restriction on the super user right is absolutely very, very important. Uh, Now, creating a culture of control is also a responsibility somewhere which has to be owned by auditors. How we can actually create that culture? I have experienced that if we started sending periodic updates to the management, if we started engaging with the process owners over a period of time, if we started creating or started showing the value which we have bring because of our reports, there a lot of management or a lot of process owners become friendly to the control team or to the auditors, and they started accepting that this is they are helping us rather than just poking holes in the entire process. And somewhere this help in fixing the responsibility and accountability at their end, that yes, we have told you n number of times, we can partner with you, you can fix this particular gap, and this will help you in turn in saving some money. or on the right side of the law. Anything, Rahul, you want to add?
No, I think this is a good summary, and wherever as a auditor we have looked at any startup, I think one more important aspect is that how we are adding value. If we are able to simplify the process, suggest automation, or suggest a change in process which not only helps address certain control requirements but also brings in efficiency, that's something which you can expect to be implemented the next day. And that is what everyone is interested in. So whenever you look at a startup, I think these are the aspects which you need to have in your mind, and that is where you'll highly be appreciated in the work you do.
Yeah, and these are just few indicators, just to let people know that there is a change in mindset there is a change in mindset which is required in the mind of auditor. It cannot be a traditional audit of highlighting gaps. Okay, so let's talk about a typical journey of controls in a startup environment. How an audit, or how people see controls in a startup environment. So generally starts with some kind of operational audits, which is managed by operational people only. They don't have a set experts who can do audits. So these are routine day-to-day issues which are resolved by operational teams, and they call it that we doing audit. But as company matured and then move up in the ladder, they started hiring specialized teams or specialized firms who perform risk-based audit basis. They evaluate the entire value chain, as I mentioned. They look at the business model very critically. They look at the processes, and then they started doing specialized internal audit, a risk-based internal audit. So companies do set up their internal audit function. Sometimes it's small, sometimes it's big, sometimes it's in-house or co-sourcing model, whatever. But they do understand the importance, and hence they started institutionalize the function. Then forensic function. They also know that there are processes, there are lacunas in the processes, and is being abused by their own set of employees or vendors or customers, and hence they also establish a forensic function who look at the complaints which they have received very critically, and then provide a resolution to the complainant also, and update the management about the problems. They also appoint ombudsmen. They roll out a whistleblower policy, and then on the later stage they also tell it is the anti-bribery, anti-corruption requirement. So what I'm trying to say is, at the start of their company, they don't understand too much about control because the size is very small. But over a period of time, they themselves want to establish these functions as specialized function because they know the importance of it, and how important it is for them to become successful. Then they also try and get help from a kind of continuous control monitoring mechanism where they look at the KPI of different departments very critically. They also look at where there are possibilities of cost saving or stopping revenue leakages, and they define the whole set of KPIs and being monitored through data analytics. So startups started looking data analytics from the control perspective also very critically, and they started establishing specific team for data analytics. Then they also look at some form of policies and procedures, and as Deepak mentioned about tone at the top, which is very important. They started looking at policies and procedures which are important from the company to run in a set standard manner, and they started defining it in some or the other way. Somewhere IFC or SysOx documentation also helped them in defining those policies and procedures. They get a kind of a repository. If it is good enough, they get a kind of repository which can be referred as one single set of documents in terms of the process from end to end. But again, it's important to update those policies and procedures in a periodic way. Why? Because company is evolving, processes are changing. And here companies also want to establish the audit committee, although it might not be a requirement for a private limited company, but they sometimes choose to establish an audit committee, and they do ask auditors to report to audit committee independently. And then last in the maturity curve is they started doing the risk management. This is generally a pre-IPO stage where company is planning for IPO, and they said, we wanted to do a risk management because this is one requirement also, but this also help management know what are the different strategic risks which is there in the organization, and is there any mitigation plan for that or not in the company. And then a risk committee is formed and started reporting to the board. So this is a typical journey where companies small do operational audit, where companies mature going for IPO, how the culture, how the functions are getting established, how the control environment is getting stronger. Okay.
Yeah, I think so. Thanks, Manuj. This is really, if you look at it from a journey perspective, I think though these aspects may somewhere come in before or after one or the other, but these are all very relevant. And something, if I were to use another analogy, something which is a startup today will be a mature organization tomorrow, or a standard organization tomorrow. So if I were to look at any other company, the Amazon of the world, when it came to India, today we have multiple similar models working in India, each successful in its own right, providing either the entire service suite of Amazon or one or more of the sub services which Amazon provides. So given that perspective, I think, and everyone is also at a very different stage of control in themselves. So it's very important to understand that every startup will mature, will go through a journey, and we will need to see that we are ahead as internal auditors in that journey to provide value at every aspect. And now, if we were to look back to the myths which we had after having gone through these aspects, we'll be able to appreciate it much better that those myths are actually myths, and every startup does have a few things which would be established, and every startup does look at its governance professionals, whether they may be entrusting the requirement of governance to the financial function or the CFO or finance manager in the initial stages, or to some other roles in the later stages, but they look up to them to see that the governance function and the audit function is properly set up and is able to add value in every stage of the startup. So I think maybe we can wrap this up with the next slide, Manuj.
Right. What startup needs, and I think we already talked much about it, from the internal audit or from the internal control perspective. Against the traditional audit, they want control to add value. I've been working with startup. I've seen different startup in my in my previous journey. They time and again they talk about value. They said, can you help us in this particular scenario? I have got an opportunity to partner with management in a lot of different projects. Trust me, if you partner with them, they treat you like their own people. They understand the value of what you bring into the table. Uh, they again say that their operating model is evolving. They can't change the process every day in day out, or they can't change the control day in day out. So they said you have to provide us a control setup which is agile enough to cater to our needs. Different businesses might be working in a different way, but if you wanted to have a centralized control environment, it should cater to all the needs. and this is up to us how we provide that kind of solution to the management. Then the another point is that they say that, you ask us to do something, but can you help us in letting know that what value it is bringing onto the table? We started following what you said as a process, but can you help us? What is the kind of an ROI of this kind of a investment in terms of time or efforts by the process owners? So that is important to highlight to the management, that this is the kind of saving, or this is the kind of process efficiency through this audit we have bring into the table. Uh, there are some mature organizations, some startup which we have seen who are able to uh, uh, have a right set of controls over a period of time. They are able to implement those controls. For example, they able to define the standard operating procedures. These procedures also encompassing the SOPs, encompassing that the tech part of the business. It's not that they only talk about end-to-end process. They also include the tech part of the business, how the work happens in the system. They fix the cross-functional responsibility in terms of taking big decisions. Uh, I've seen myself a company having few set of buyers to a proper purchase committee who takes all the big decision jointly, involving different set of business, different set of people from different set of departments. Uh, then they started removing the manual dependencies. They said, system should take the front seat, and dependency on the system should be there. Also, people are process driven rather than person driven. So that kind of culture is being implemented in a lot of companies now. And then they also look at activities from the duplication point of view, because it actually take away a lot of efficiency in the process. So they said, if something is redundant, repetitive, we will do away with this. So those standard operating procedure helps a lot of organization. Similarly, they started, as I mentioned in the previous slide, that they started putting internal audit department, which is reporting to the audit committee. Although audit committee is not a requirement at that point in time, but they said no, we will have an in-house IIA department, and they will involved in a lot of different processes. While creating that new process, we will involve them. They will do a proper monitoring of high risk areas on a periodic basis through audit, through data analytics, and then they also look at the system efficiency or a process efficiency points very critically and started implementing it. Similarly, on a automation side, they started looking at tool-based data analytics, not only through audit, but it becomes a culture in a lot of startups that in every big department they have a data analytics team who look at KPI, who look at the performance of a particular team very critically. They in turn helping us out in looking at the entire processes critically, and letting them know what are the improvement areas. So they, in a way, they are the first line of defense, which they themselves has created within their own functions. Uh, Tech-enabled compliances. A lot of companies started putting compliance tool in the companies where they hire someone who look at their operations very critically, put all the compliances which are required, and monitor it on a regular basis. Again, they automated the MIS so that there is no manual intervention, and started giving it on a regular basis. Risk transfer. This is very important. A lot of companies started centralizing their entire function. They're kind of creating GSS kind of a model for a lot of functions. For example, customer service, or procurement process, or sometimes even accounting, or payroll processing. They create a kind of GSS model, and then they give the entire set of their entities to that particular model. And sometimes they also outsource it to the experts. And they said, we believe in doing uh, the core areas ourselves, and then outsource the support areas to the experts. and this is how they are also doing a risk transfer. So these are few areas which startups started looking at it. We always believe that this is only done by mature companies, but again, startups are now moving ahead in the path and implementing all these changes for good in their entire working processes. Rahul, you want to add something?
No, I think Manuj, you have covered it really well. This is good.
Okay. So how startup can be an enabler for change, or how organizations are changing right from the beginning when they think that a product is a business line for them, versus now they think that organization as a whole should go hand in hand. So earlier, at the start of implementation of internal control, they started putting it in silos. They said, first, I want to bring controls in this one particular business because this is important, big for me, and then I will move on to the next set of controls. As a traditional audit, we always been doing procure to pay, order to cash cycles kind of thing. But if you go to startup, a lot of audits are done business oriented audit. So I want to cover this business end to end rather than covering procure to pay or order to cash in one particular cycle, because they all operated in different silos. And so first companies started understanding that they have to combine, they have to consolidate uh, uh, these different businesses, or even before that they started implementing controls in independent businesses. And then comes the second stage where they started centralizing the entire set of business, or this entire set of process through a kind of a GSS model, or through a kind of a common centralized functions. And then they started implementing those set of controls, the right set of controls in those functions, that there will be one procure to pay department in one company, rather than every business have their own procure to pay department. And then in the long term, once they have achieved a goal where one function doing the entire set of activities, uh, they started doing benchmarking with the industry leaders, how other companies are working. And as an example, I said that they started outsourcing it to different experts, their entire set of operations, which is support function for them. And then they started adopting the right set of practices which are followed by industry leaders. And then they wanted to strong their internal control and governance to move ahead in the path of IPO. So ultimately, for startups, the journey which ends as a startup is when they actually go for IPO. So again, the catalyst is the internal controls and governance, which is, if you trust me, for IPO, people start preparing at least a year and a half for improving their entire internal control function or the governance framework.
So I think
So
I'd like to add something to what Manuj just said, and that's maybe now also in the public domain. So Manuj is right that people do prepare for extensive, maybe 18 to 24 months, if not 3 to 4 years for IPO, as it was earlier. But in a startup environment, the situation is so dynamic, and at the same time, people are so dedicated and smart that many startups, sorry, there's a power failure here. Many startups even go on to prepare for an IPO within, I'll say, 10 to 12 months straight. And I have been associated with a couple of them who have actually done that, and even on the verge of or brought out successful IPOs. So it's a very dynamic world. So the perception, it really busts the myth that startups don't have adequate controls. A listed company does have multiple controls, and as everyone knows, multiple checkpoints and requirements, and startup meets all of them when it gets listed, which is ultimately the long-term goal of any company, to get listed on one of the public exchanges and prove their mettle, kind of a thing, from a financial perspective. So controls are very well established when a startup puts their mind to it. and but the perception of control or the requirement of control in a startup is very different, and they want it to be updated as soon as the process is updated. So as internal auditors, we need to be smart enough to see and have I'll say good interaction with the business team to understand where the process is changing and help them change the controls on a regular basis. So the concept of, I'll say, agile internal audit is something which a startup will really well subscribe to, and that's what we need to be adapting as internal auditors. Yeah, Manuj.
I think let's open the forum for the questions.
Sure. So Manas, are there any questions?
Just allow me to check, sir, one moment.
Sure.
Well, I'm not able to see any questions as yet. Requesting the participants to post their questions. Yeah, so we have received a question from Rajat Gujral. He has asked, are there any startup failures due to lack of effective controls?
Sorry, can you repeat the question? Startup failures?
Yes, due to lack of effective controls.
So I think I have not heard of it. Manuj, if you have. A startup, as I think we mentioned earlier in the somewhere in the discussion, a startup will fail because of failure of its business idea. Generally, internal controls are very important, but startups do have adequate amount of controls that it will not fail because of a lack of internal control.
So, Rahul, in fact, I have experience where because of the governance issue, a startup got failed. I really don't want to name it, but yes, there is a particular startup, and we all know about it. It's a common name in the market at one point in time. It got failed because of severe governance issues within the organization. So, because this startup still exists at a very small level, so I don't want to name it.
No, so there may be one odd such case, but if you look at it, that can happen with any company. So to say
Right.
startups failing as a governance issue, I think, or a controls issue, yes, there may be one odd startup here or there, but I believe that will be more of an exception rather than the rule.
Thank you, sir. We have one more question from Naveen Muthu Manikam. So, in the journey of control and startup environment, will defining SOPs not come at earlier stages? For example, before performing risk-based internal audits. What are your views on this?
Manoj, you're smiling. You want to take it?
Right. So, what you're saying is absolutely right. Ideally, first we set the rule and then start auditing it. As a thumb rule, it makes perfect sense. But, again, if you look at startup, do we have a set process for them at the start of the company? No. How can you define an SOP for them if they don't have a set matured uh, phase of working? Again, audit is not they are looking at a compliance function. Audit, they are looking at the value add. So they probably add or bring auditor first and SOPs probably later on.
Right. Can we take the next question, sir?
Yeah.
Yeah. This question is from Mr. Bala Satya. He's written, do you believe that German fintech Wirecard failure is primarily due to lack of internal control, or it is negligence by senior management and board?
Unfortunately, we don't have any view on that, so we can't really comment.
Right.
So I think
next,
I'll agree with Manoj. Your knowledge is as good as our knowledge. So what happened there, no one. So obviously it's not in the public domain. So unable to comment on that.
got it, sir. So there's a next question which says, how do startups tackle regulatory changes in line with their changing operating models?
So again, that's a very big challenge for any startup because regulatory environment is changing. At the same time, their business model is evolving. So, of late, a lot of startups started putting a lot of legal. They have a set legal and compliance function who looks at those compliances on a day-to-day basis. They update their process basis those compliances. But yes, sometimes it takes a back burner, it takes a back seat because of evolving operations or because of speed. But now startups started putting compliance tool, and they sometimes engage with third parties who evaluate the entire set of processes, who evaluate the business model, help company know what are the local rules which are required, what are the state level rules, what are the country level rules which are required in any to abide by the compliances which are set by the government. So startups started looking at very critically, and they create functions, they put a monitoring mechanism, they hire third parties for it. And trust me, now startups actually spending a lot of money for compliances.
Right, sir. So we have the next question from Mr. Bala Subramaniam. So he's asking, from startup standpoint, addressing segregation of duties will be a challenge because of the limited resources in the initial phase. How do we tackle this situation?
So, wherever you have a thin layer of people, not only startup, but even for a mature company. And when we audit mature companies, they said, you are auditing our regional office. We have only 3 people. And how will you, ensure that there is a proper segregation of duty within that particular regional office? So that stands true with the mature companies also, where the operations are managed by very less people. Having said that, obviously SOD is something which we can't expect at one point in time, where startups are small or a function is very small. But when they mature, when they grow, SOD is something which is a must. Or as an alternative control, a lot of companies started putting monitoring controls, where even if something goes wrong, they detect it probably on a real-time basis. If not on a real-time basis, at least on a weekly or a monthly basis. So that's a challenge, not only startup but any company. uh, Once they scale up, they have a lot of people at their disposal and they started putting SOD. But another way of looking at it is putting the monitoring controls, detective controls.
All right. So we have a question from Mr. Vikrant. He needs to know, is the legal team really required in the startup, or can it be merged with the internal audit team?
I think every team is required in a startup. We need to start recognizing startups as any other company, as any other business, which starts, grows, and then matures. So in the beginning, obviously, there are very few people, but the startup by its very nature, because the ideas are very dynamic, very different, and generally the territories which they explore are very new. The regulations may or may not be there. So it's they do have a legal team very early on, and where they do not have a legal team, they generally do have external legal support. Because if you look at a startup, there are a lot of fundings which are happening. There are a lot of other contracts they're signing with multiple. So if, like we defined the startup environment in the beginning, there are incubators, there are funding agencies, there are other agencies. So all this needs to be legally vetted. So a strong legal team definitely is required in the startups. What our view would be. Yeah, Minas, any other question? Minas, any other question?
Anas, can you hear us?
Yeah.
Hi Rahul, this is Amit. Yeah, I guess there are no further questions in the chat.
Sure, great. Please. Okay, so I think thanks a lot everyone for joining. It has been really a eventful Friday evening, and we've been able to look at a very different topic, and that is what the endeavor of the Delhi chapter is, to try and bring in topics which are different and at the same time industry relevant, and bring to you experts from the industry who can talk from their experiences and provide practical insights. So hope you've been able to get good value out of this, and uh, also hope to see you again in other sessions we'll be holding. Thank you. Amit, would you want to say something?
So thanks, Rahul, for this. And I actually, would want to take this opportunity to thank all of our panelists and guests over here, starting from Prashant Hakim to Deepak Ahluwalia and Manuj Aggarwal. I think all three of them have definitely, given their views on this pertinent topic again. And Rahul, as you said, I hope this session was really useful, to everyone. There are a lot of takeaways that I actually see from these sessions. Right from Prashant talking about the whole journey that startups go to, the analogy that he gave with respect to flight landing. When you start up, perhaps you define controls at 20,000 feet, vis-a-vis when you actually you're more mature, you can go and identify controls in a much more detailed manner, right? And from there, Deepak calling out of how startups need to go about defining controls, the tone of the top, how important it is. From there to how audit can add value again to businesses and processes by highlighting relevant risks and not just the theoretical risks over there. I think that is something that is really useful. In fact, when the session started with you and Manuj, again, I think Rahul, the analogy you gave of think of an organization like a car moving through a toll, right? We would ideally want all that to be as fast as possible, and I think that's how mature the organizations should be in terms of a control environment. And Manoj, talking about all the do's from an internal audit, right down from using data analytics to understanding the models, creating culture of controls, etc. I think that is something that's really useful. I think in the end, I think one big takeaway that I would actually give us at the last, when you talked about the startups can use controls, I think that the three words I think would have sum it all is agile internal audit. I think in the end, the more agile an internal audit in an organization would be, especially in a startup environment, I think the more useful it'll be for everyone. So I think that's all that I would, just want to, quickly summarize this whole session. And as I said, along with the panelist, I do want to thank Rahul, you and Saket for, being kind enough to moderate this session. And hopefully all the participants found this to be of great value. So thanks everyone. I guess with this, we can just bring this session to a close.
Thank you. Thank you, everyone.
Thank you, everyone, and do have a nice day.
Thank you.